Good evening, everybody. Welcome to the Sunday night market strategy session. If you are here to get all the best information about the market and to lay out a trading plan for next week, then you are in the right place. I'm joined by my partner in analysis, Paul Schatz. He'll be on the horn in a couple of minutes. Real quick, just want to go over the economic reports. There are no earnings of consequence this week, so it doesn't even make sense going over the earnings calendar. But that's going to end soon. We're going to be back into earnings season. Draghi speaks tomorrow morning at 10 o'clock. Fisher speaks at 12:20, and then Williams speaks at night. We got the French flash manufacturing and German flash manufacturing. Now, they're early on Tuesday, but still, they could have an effect. Probably won't, but they could. And then we have the CPI, core CPI pre-market Tuesday. New home sales right at 10 a.m., right after the first half hour's in. German IFO business climate Wednesday early. Core durable goods pre-market, then durable goods also. Then you got your weekly unemployment claims on Thursday. On Friday, you got the final GDP. And at 3:45, Yellen speaks. Now, I don't know what she's going to talk about. Maybe Paul will pontificate on that, but that's really nice, right? Before the weekend. I mean, could she should have started, she should start talking at 3:59.
Oh, that's a really big word for you, pontificate.
Yeah, well, I've been reading the dictionary. What I did is I flipped through the book and I just put my finger down on a letter and just started going.
Good for you, Mike.
Yeah, so I got to polyps and then pontificate. So anyway, but Yellen should start speaking at 3:59 to make it even a closer call to the weekend. But anyway, she's speaking at 3:45. See what Paul has to say about that. Market-wise, we are coiled up and ready to go, in my opinion. Of course, we have to wait for confirmation because what is a chart pattern without confirmation? Does anybody know? Anybody know what a chart pattern without confirmation is? Anyone? Anyone? Interesting. Okay, but anyone? Anyone else? What is, that's right, just a pattern, but keep going. Chart pattern, right, chart pattern without confirmation is just artwork. Right, it means nothing. It's nice to draw lines and all that. I get the emails all the time. Well, why don't you just go long or short? Well, because we're in a coil. So why do you need to look at charts at all if you're just going to guess which way we're going to go? And you don't. And if you're a great super guru who can dream about what a stock is going to do or goes by gut and feel, then you don't need to look at charts. Okay? But everyone else has to look at charts. All right. So we are coiled up. I still believe 212.97 will be tagged. This is this spike high from December, and Paul has commented multiple times that eSignal says it's a real tick. I know TradeStation says it's a real tick, and I know Thinkorswim says it's a real tick. So, I mean, I'm sure there's other data carriers, but basically those are the three biggies, at least for retail, and they all say that's a real tick. That is a probe pattern. 212.97 should be tested. One of the signs this week, the good sign, is that the Russell has decided to lead. Now, Paul will continue to pontificate because I can't find another word about this, but the Russell is actually supposed to be losing its leadership sign around now. Its leadership shine around now. Isn't it, Paul? I mean, I thought the small caps outperform end of the year into March. But now, all of a sudden, they're like stepping up here in March. Am I right on that, or am I getting that wrong?
Well, you're right. You're not wrong on anything. I think stated a different way, I would say the highest likelihood for small caps to outperform is mid-December to mid-January. But they definitely will outperform periodically throughout the year.
Right. So anyway, the Russell leading, good sign. Okay, would I rather see the NASDAQ leading? Personally, yes, but I don't care. My deal is the NASDAQ or the Russell, if they're leading, that's good. I don't want to see the Dow leading because that is worthless, despite Apple now being a part of it. It doesn't matter. Okay. And the S&P leading, okay, I'm not going to turn my nose down on it, but I want to see the NASDAQ and or the Russell out in front. Those are the two that I want to see, one or the other, preferably both, out in front. And of course, they can't both be out front, but position 1 and 2 is what I mean. Okay? So Paul's going to go deeper into the indexes here, and you see that the Qs came just shy of the highs here. I still believe before this year is over that the NASDAQ will go to a new all-time high. Okay? I cannot give you a date. I don't know when that's going to happen. I believe it will happen this year. Are we overbought? Yes, we're still overbought. On the ultra short term, we're not. But, well, on the NASDAQ and the Russell, we are. But on the S&P, we're really not. We're coiled up here. But we have been overbought for quite some time on the intermediate term, and we continue to go up. All right? The trend is your friend until the end when it bends. And, yep, everybody likes to say it. Everybody likes to quote it. Everybody likes to think, oh, the trend is your friend. But you know what? Why don't you listen to it for a second? Okay? Very, very important to understand. You can go against the trend. It's fine. But you have to understand what you are doing. The likelihood of you getting an oversized gain is much more diminished when you go against the trend than when you go with it. Surprises happen in the direction of the trend. Okay? Now, will we eventually top out and get a pretty decent correction? Yes. I don't know how many days, weeks, months, or years are in it eventually. So in the meantime, until we see more evidence of this, well, the trend is your friend. Now, Paul is doing a class coming up soon on how to spot a bear market. It's actually a class that the market timing workshop people will get part of their investment in the market timing workshop. I'm also doing that class that I talked about, which how to find stocks ready to make big moves. We're going to combine the two classes. Again, for the Mastering Market Timing workshop folks, it's included. Okay? But for everyone else, we're going to be offering that very soon. Stay tuned for details. We should have something up next week. Now, does that mean Paul thinks a bear market is coming? I don't know. I haven't talked to him enough about that. I don't think that he believes a new bear market is coming, but like the Boy Scouts say, be prepared. And yes, I know. Instead of looking for a bear market, why don't we look for winners now, winners now, winners now? Because if we can identify the bear market as quickly as possible, if it does set up, I'm tired of saying when because I don't know if it ever will, but I really do believe it will. But if and when it does set up, you're going to be way ahead of the curve. You're going to be able to save more money and save much more money than those who get out too late. And you're also going to be able to capitalize if you decide to sell short. With that being said, I'm going to hand it over to Paul. I will be back for all your questions. And that's it. I will talk to you soon.
Okay. Good Sunday evening, everybody. Hope you all had a great week. I definitely did because, one, those of you who were in the market timing class, this was one of the best Fed day trends that we've seen in a while. So talk about having fun. The trend, we had two trends play out this week. One, the trend was to buy the close on Tuesday, sell the close on Wednesday. And I gotta move this over. Come on. So buying the close on Tuesday yielded us 210 in the SPY, and one day later it closed at 212. I will take that every single. Oh my God! I mean, talk about a nice trade. Roughly a 1% one-day trade. That was fun. And then the next day, the trend was to short this close at 212 and hold it for a day and cover it at 211. So 1.5% in 2 days with zero drawdown. Give me that. I'll take that 2 or 3 times a year and be ecstatic. So I was pretty pumped that we nailed the low the day before, and we got the little short trade the day after, and then we took off again on Friday. So I continue to be befuddled whenever I'm in the media, which I was last week, by how many bears just vociferously argue with me all the time and call me, head in the sand perma bull. Because as long as we've been doing this Sunday night session, which is with Tiny, it's got to be it's got to be 4 or 5 years, whatever it is. I've been generally bullish pretty much the whole time, meaning buy weakness, buy weakness, buy weakness. I pounded the table again. We said it last week, buy weakness, buy weakness. I didn't know whether we would have one little push down below this low or just go. Didn't care. I bought. I was all in anyway. So any of you here and none of you guys argue with me, so the arguers probably left, but it's been an incredibly easy market to buy weakness since the early 2012. I have no idea how long it continues, but I'll enjoy it while it does because it's much easier to make money in a bull market than a bear market. And yes, it's much easier to make money in an up market than a down market. So as long as we have this really fun market, I hope everyone's enjoying it. Eventually, people will begin to love it, and then we know we're close to ending, but not yet. And I think long before this bull market ends, you're going to get a 10% correction. So I don't want to discuss it because I don't think we're there yet. So I hope you all had a good week. I only worked 4 days, to be truthful, because my little guy turned 7 on Friday, so I took him to Vermont Thursday night. We skied together Friday and Saturday, and came home. The family came over for a big birthday party celebration last night, and then I took my other 2 kids up to UConn for the 9 o'clock UConn women's game, which obviously they obliterated poor little St. Francis of Brooklyn. So that was fun. And now today was his big birthday party with all his friends, so now I'm exhausted and getting ready to go back to UConn tomorrow night for round 2 of the NCAA tournament. So that was my weekend and week, and except for getting stuck on the chairlift Saturday morning, first run at 8 o'clock for 45 minutes. Everything was great. All right, let's dive in and see where we are. So we closed Friday in pretty good shape. Dow was up almost 1%. S&P up almost 1%. The NDX lagged a little bit, up 75 bips. Russell and mids were very strong. Russell and mids have been very strong. I just moved money out of the Russell. I think it was Friday. It may have been Thursday, from Russell to more mid cap, but they're so close anyway. It's not a big deal. It's been a fun market. The probably only thing that I've been disappointed with is how I've traded some of the plain vanilla high-yield mutual funds. We'll get to that in a minute. But it was a decent tape, essentially 4-1 to the upside on Friday. It's pretty good. Up-down volume, pretty good. Let's dive in and see where we are price-wise. So let's start with the Dow. I'll pause for questions and comments at the end of the market index section. So here we are. Here's the DIA. Apple. I suggest you read this blog. It's investfortomorrowblog.com. That was, I thought, a pretty good one. I wrote about the Fed trend, talking about how they're nuts to raise interest rates, which I still think they're nuts. And then I wrote, which I thought was a really good piece, you may disagree, which is fine, about NASDAQ 5000, is this a bubble or not? So that's that. Let's go back. So the Dow is one good day from all-time highs again. Not a convincingly bullish day on Friday because we closed probably middle of the range, but this little tiny tail up here. Market's a little tired. So short term, could we pull back a little bit? Yeah. Are we due to pull back a little bit? Yeah. Is it going to be a big pullback? I don't know. I do think this. If we begin to pull back more than the midline of Fed Day, then we'll probably take out these lows, put a reversal candle in, and then go back to new highs. Or we may go right to new highs now. To me, right now, it doesn't matter to me. I think regardless, we're going to go to new all-time highs. S&P looks almost the same as the Dow, touch stronger. It's maybe half a day away from all-time highs. Mid-caps look dynamite. They are now sitting at fresh all-time high. I love saying that all-time. You know, when you're a bull, it's great to keep saying all-time highs. And I love arguing with the bears on Twitter, who for 4 years have been telling me that this bull, we're going to have a depression. The bull market's we're going back below 6,500 on the Dow. Blah 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 blah. Not happening. Russell 2000, the silent winner of the year, fresh all-time highs. So it's a good thing you got the Russell and the mid-caps at all-time highs. That's a risk-on trade, and that's healthier for the intermediate term. Short term, it's crapshoot. The Qs starting to lag, folks. Crummy candle on Friday. I don't love it. Still only one good day away from fresh highs, not all-time highs, but looks a little tired. My sense is this. If we pull back here, whenever the pullback's over, buy the Qs, and they will take off. And if we take off from here, I think the Qs will cede leadership take over leadership from Russell and the mids in the not-too-distant future. So those are the major indices in the U.S. look fine. Europe, I mean, what a bear trap here. Folks, everyone, please look at this. So Fed Day, boom. Europe had a monster day at Fed Day. Last week we talked about one little hammer last week before. We got another hammer to begin the week, and then we took off. So no one should have been short Europe. And then look at this beautiful bear trap. It doesn't look like much, this tiny little inside day. But a lot of people got negative on this day. And then, boom, baby. Europe comes right back out. Europe is only a couple of ticks away from fresh 2015 highs. I spoke about it here. If you remember, I said, looks a little bit tired. It should pull back and then go through the 200-day moving average, which it is right now, and eventually take out these highs, which I think it does pretty quickly. So Europe still looks pretty good. Emerging markets, which you know I've been long for a while and positive on. It's been a frustrating, grinding move. Lots of fits and starts. Huge move on Fed Day. Faked out a lot of people here, and then boom. So I expect emerging markets to take out 2015 highs here and maybe go up to the 200-day moving average or so. I did have a trade. What did I dump? I dumped India last week, so I still have big position in China, still long China. To me, it looks fine. Stochastics are in the right spot. We bounced here, a little overbought, maybe a couple days down, and then back to new highs for China. Still looks fine to me. EPHE, I added to my position. So it's been consolidating for about a month, and I do believe that the ultimate resolution is another all-time high in the Philippines. So I added to this position. with the money I sold from EPI. Why did I sell it? Well, in my ranking system, it fell off the hit parade, but I hate this is not good action. So if this day were inside in here, it'd be fine. The fact that we closed essentially at the highs and the next day took out the lows is not good action. So something happened from one day to the other. I have no idea what. I don't really care. I just took action. It wasn't worth the trade right now. I can always buy it back in the future at higher prices. It won't bother me. So let me pause for a second and see if there's any questions. One sec. Okay. Dave, I'm going to get to biotech shortly. Hang in there. What do you think of SLW? Aldo, I don't even know what SLW is. SLW, silver something? This is for Tiny. This is a stock. This is for Tiny. He'll cover that when he comes back. Let's see. Could that be an island candle on the Qs? And what do we need to confirm that? What will happen if the island? Okay, let me just hold on. Is there an island candle on the Qs? There is no island candle yet on the Qs. Could we get one tomorrow? I mean, it's like if we gap down here, it would be a really tiny one. No pun intended. I'm not sure this would qualify, but let's see what happens tomorrow. I don't. I'm going to say we're not going to have an island candle, but let's see how. You would need a really negative opening tomorrow, Johanna. So Ricardo asked about the dollar hurting earnings. So from a fundamental or maybe macro standpoint, I've said for many, many years, and I've done the work, so I'm not just spouting out of my tushy. I've done the work. A strong dollar does not equal a struggle for any companies, let alone what you hear on TV. That's why the multinationals are struggling. It's nonsense. It doesn't hold up to the snuff test if you actually do the work. So I know what you hear on TV, that IBM says this and Microsoft says this, the dollar is hurting them. It's nonsense. Usually they hedge their currency exposure. And what happened now is that, frankly, in my opinion, they got caught with their pants down. They cut the hedging programs down because the dollar had gone sideways for so long, and then I think it temporarily hurt them. But long term, no, I don't think the dollar is going to be really hurting some of these multinational companies. JN, I'm going to cover the trannies in about 5 minutes. So, and here's the dollar. And if you look at a monthly chart of the dollar, okay, the dollar was strong in 08 and stocks went down. That's because the dollar and stocks went opposite each other. 2010, stocks went up and the dollar went up. 2013, stocks went up and the dollar went sideways. Mid-14 to now, the dollar went up and stocks went up. So in 02, the dollar got crushed and stocks got crushed. In 03, the dollar got crushed and stocks went up 30%. So this is all nonsense. People don't do their homework. Not you guys, but you hear in the media. I mean, look from the mid-90s, 95 to 2000, the dollar soared and stocks soared. And then stocks got crushed, but the dollar went up. So please, I beg you, don't buy the pundits' nonsense. They don't do their homework. It's very frustrating. They just make up comments. So you see the dollar here. I am still bullish the dollar over the long term and intermediate term. I think we've almost played out the short term of the dollar. It's getting volatile. this is the time where I got to start pounding the table again, because all the smart money was short the dollar, and all they could get was a sideways movement. And once we got going again, boom, goodbye. That was your day of recognition, and the dollar has been up pretty much ever since to the peak. So dollar still looks good. Intermediate, long term, certainly stretched and due for a pullback of significance, or maybe it goes sideways again. Let's go to our 3 key sectors. Banks. I've been neutral on the banks. I said maybe you could lean a little positively, but as for full disclosure, I have not been good with the banks. So they're going sideways, which is not necessarily bad. They're not collapsing. That's a good sign, but they're not leading yet either. The results out of the Fed meeting threw a little cold water on the banks, because the banks want higher, not high rates, just a little bit higher than they are now to make some more money. We'll call this neutral. Dow Transports. I've been talking about it for a while, that I think, and I've said this all along, this ginormous pattern here, I believe, eventually resolves itself to the upside. So if you just double the height of this pattern, we'll call this 154 on the downside and 166 on the upside. So double that, and you get to 178, which means a very big move coming in the trannies eventually. Hopefully I'll be there to make a few shekels. So I rate this positive but not really bullish. And the semis. Semis we talked about last week being bullish, and I think it's still the same way today. Semis are bullish. So the key sectors, banks, neutral, a little more positive than neutral. The trannies look okay. Semis are outright bullish. So the 3 key sectors look pretty good. IGV software looks fine. Nothing really here. If you're long it, stay long it. Put your stops in. Don't get greedy. Telecom, which I said I keep saying, one of my sector plays of the year, waking up a little bit. On Fed Day, if you recall, the defensive sectors woke up. REITs, utilities, and telecom, all the high-yielding sectors woke up, which is good for the dividend players. So telecom, is this the breakout move for the year? I don't know yet, but it certainly could be. Diversified financials look a little better than the banks. They're not bad. I mean, they look fine. They look like they want to go to all-time new highs again. We'll see. They look fine to me. The consumer, everybody keeps talking about the consumer being dead. This chart says the consumer is alive and well and enjoying 2015. We are right at all-time highs. I would expect an additional push higher in XLY, as I've said for weeks and weeks and weeks. The consumer is far from dead, and this group is far from over. And retail, same thing. It was lagging, so let's spend a minute on this. This is XLY divided by XRT. It just tells you which is leading. So right now, XRT, because this line's going down, is leading. When the line's going up, XLY is leading. So retailers are leading the larger discretionary sector right now. It's not bullish or bearish, it's just a fact. Nothing really to glean from it. And the other sector I chose for the year, home builders. I talked about this pullback being buyable. I still love home builders this year, and I don't think the move is over yet. Even in the face of really crummy home builder news, whenever I was on TV this week, I can't recall. What was that? Tuesday, Monday? Tuesday, St. Patty's Day I was on. I mean, terrible numbers. GDP was bad, and new home sales were bad. The builders still look pretty good. And 2 of the builders, which you can ask Tiny about, Ryland, it broke out. These are 2 of the stocks that I had given on for my TV show. Ryland was one of them, because I had been here, And I said the breakout's coming, boom, 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 and it did. And the other one in the home building sector was it Lennar? Yep, it was Lennar. Was it Lennar? No, it's Meritage. MTH I like. Yeah, this is the other one. These both look pretty good. Maybe a little extended, but they look pretty good. In any case, let's go back to economically sensitive stocks. The industrials, this is the sector where if the dollar was really crushing the stocks like the media is portraying, this is where you'd see it. Nobody can tell me that this chart says the dollar is crushing the big multinationals. That's a bunch of nonsense. I haven't liked industrials yet. They look fine, but they're just not a leader. I'm not really interested. Same thing with basic materials. I haven't had an opinion, and that's because I did research, and they typically don't lead any year this stage in a bull market. They can go up. Market goes up 40. They can go up 30, but they typically aren't a leader. So I'm not really paying a lot of attention to the material stocks. Energy. XLE, to me, and yes, I'm a broken record. You feel free to disagree. No worries, no ego here. I've been long OIH. XLE has been the better play. It still looks good to me. I still think we're going above this high and closing this gap right here. So it's in a good spot. Stochastics just opening up, and I think we're going. OIH is what I own, and I bought more this week. This is a little more beaten down, but I'm looking for a trade to close this gap and for me to get out. So I bought more right at the bottom, a little hammer day, happily. And I think OIH is going. And if not, at some point I'll get dumb enough and stop out. Let's see. What else do I own? Okay, so let's go to healthcare. My two biggest sector holdings now are XLV, which nothing new. I've owned it forever. Crummy day on Friday, both this and in biotech. Bad candles, they're overbought. I would not be surprised at all if we pull back to the breakout level. Right there, crummy candle. And on the IBB, really a crummy candle. So if a pullback is coming, nobody could be surprised. I still own two very large positions in IBB and XLV, and with secondary one in OIH, but I'm going to hang on to the pullback. Let's see. Some more defensive stuff. REITs had a great week. Somebody asked me, would I be long these? And because this is one of those instances right here, you all know I hate tall red candles if I'm bullish. And I would never buy this low. Never, 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 never. I'm not comfortable doing it. I like for a reversal. So that's why I couldn't buy this low. And then I would have said, well, if I missed it, it'll probably close the gap and then pause, which it did for 2 days, never pulled back, and then took off. So it looks a lot better now. I missed it. Am I going to chase it? No, not my character to chase it. I'll let it go. It looks fantastic. Probably it's going to all-time highs. Utilities, not as good, but okay. Good day on Fed day, pulled back. They look okay. I mean, I could see utilities getting a bid, and maybe where we are, 45, maybe trading up into the mid-upper 40s as people go back to the yield trade because the Fed's not going to raise rates in April for sure now. And XLP, not for yield, but for defense, really, I have no interest here. Not trading well, it's not trading poorly, but I still don't have any interest. So those are sectors. I will cover gold with commodities. Let me pause and ask for some questions. What is that long tail on the DX, Paul? Joanna, no, that was Fed Day, I believe. Let's look at the ETF, UUP. So this was Fed Day right there, Johanna. And on the DX, this was Fed Day. So it is a good tick. At least I believe it's a good tick. I should ask Easton, but I'm pretty sure on the Fed news, the futures contracts went a bit chaotic for a couple minutes. Let's see. Edward, DX, I think it's pulling back in the short term, and I think we're going higher over the intermediate and long term. There's going to be a significant pullback coming in the dollar. I don't have strong conviction right now whether it's right in front of us or it's later on this year. But there's going to be a significant pullback. People are going to scream and yell the end of the bull market in the dollar, and you can buy it, in my opinion. Because I said, those of you who read my blog or have read me, every year since 2008, I've talked about a long-term bull market in the dollar, a long-term bull market in the dollar. Dollar's going much higher, and I still think that. Okay. Let's see. Why did the regional banks have to put in such a bad candle on Fed Day? They did because, so here was Fed Day for the regional banks. They traded poorly because the Fed is forestalling raising rates. And the banks want to see short-term rates go a little bit higher so they can increase their net interest margins, excuse me. So it just puts off for at least another quarter when the banks can be even more piggish and greedy and make money. Is the euro headed to 1 or 0.8? Yes, definitely is headed to 1 or 0.8. Here's the euro. So we closed at 108. Okay. I think ultimately, is it Edward who asked the question? Edward. I think ultimately the euro is headed well below par or 1. Is it going to happen right here? I don't think so. So those who've been here a while, I've been saying this for months and months. Smart money has been long the euro for a long time. They've been long and wrong. At some point, the euro is going to bounce. I do think that any bounce in the euro, just like I've been saying with the yen for 5 years, any bounce in the euro is shortable or saleable. But I do think longer term the euro will be on it. The yen, which we've talked about, nobody could ever say that I haven't been clear. I've been clear since the yen was 50% higher. It's going to go down, and once it starts, it's going to be dramatic. I think we've got at least another 50% to go on the downside in the yen. And these kind of consolidations, I would short any move to the upper end of the range for a move below 80. Currency trades take a long time to develop. You need to have patience and staying power. Okay. Bill, what's with the German, the Bund? So Bill wants to know what the heck's going on because Germany is essentially borrowing money for you and not paying you any interest rates. And that's because most of the northern Atlantic countries are at negative short-term interest rates. So if you give Denmark and Sweden and Switzerland your money, you're going to lose money in the bank there. They're charging you money to put in the bank. They don't want you in the bank there. So, and Germany has a very similar economy to those. They're fiscally conservative, just like Sweden and Denmark and Belgium and one other country I just forgot. Doesn't matter. So that's why when you look at our 10-year, and everybody said, oh, it's bond market's going to get crushed, blah, blah, blah. We're at 193 on a relative yield basis, looking at other global yields, the Germany, Japan, Spain, and Portugal. Our 10-year bond and 10-year note at 193 is actually a bargain. Johanna, so on the yen, would I not say that this is a bottoming? No, I don't think I don't, Johanna. I mean, so let's separate out my fundamental or my macro view, which is my macro view from here was that the yen was going to go down at least 50%. Now I think it's going to be even more. So do I believe this is a monthly chart? Here's the daily. From a technical basis, yeah, this could be a bottoming pattern, but I think it's going to be a failed bottom. I think that's why I think any kind of bounce we get up here, you sell it and you short it, and you just need to have some patience because eventually the bank, unless Abe is thrown out, then I think they're just going to keep printing more and more and more money. Edward, we always do this NDZ. Let's see if we can get it right the first time. NZD. NZD. What's coughing up there? Okay, here's the New Zealand dollar. We're getting a little off track, but I'm happy to answer questions. Here's the New Zealand dollar on a, let me just reset this chart. On a daily basis, had a beautiful rally. This is a bit odd. Now, a couple of things that I noticed here. I don't know where the smart money is, or else because that's me would hold a lot of weight. This is definitely an ugly candle right here. Warning of a reversal. You got it. The bulls made one more last gasp. You had a bearish engulfing here. So for me, I would short a rally. Maybe we get a rally back into the 136 area, and a shorter rally for this move back down into towards 128 at least. But I don't know. To be fair, Edward, take what I say with a grain of salt. I have no knowledge at all of their fundamentals in New Zealand. I'm just looking at it from a chart standpoint. All right, let's move on. I'm fading fast. Let's see. So we covered the sectors. We covered the dollar. We covered the yen. We covered the euro. Now we're done with currencies. Let's go to bonds. TLT, which I've said, I've bought and sold this a lot lately. I came into last week, as you know, long it. I'm still long the dollar. So I'm making a little bit back from getting really beaten up pretty good in here. This hurt. I sold it here, and then I bought it back here a little higher, and I'm long it from here on in. So what do I think of bonds? I think bonds are going to be in a trading range for a while. I've said it for a long time, 230 on the upside, 150 on the downside. That's where I see the 10-year yield for the foreseeable future. I think our economy is stable and okay, but certainly not firing on all pistons. We're not hitting escape velocity. We're just kind of there. But on a relative basis, our economy is a lot better than Japan and a lot better than any European country. Let me just poke in here for a second. And here's the NYSE AD line. Right back within a whisker of all-time highs. Bear markets almost never, ever, ever, ever begin with an AD line this strong. I'm not going to go into my normal spiel. That's period, end of discussion. I won't even entertain an argument. Junk bonds, which I had sold, as you know, a couple of weeks ago. They had a great day on Fed Day, and now we're consolidating a little bit. So I expect JNK to trade higher and probably challenge the highs from early March, late Feb. I do not have a position yet. The plain vanilla funds, I sold everything. I'm out of everything. We'll see what happens in the next couple of weeks, but I have no positions anymore. It reached my stop out point. We stopped out, and I think we stopped out in here. Is that right? No, I'm wrong. I stopped at a part here and then part down lower. So I have no position, which means junk bonds will probably rally. All right, let's go back. I'm going to pause and get questions for a second. All right, and there are none. Good. So you got no question. It means you guys either sleeping or bored. So we did. Let's go on and do. Let's do gold. So gold. Gold traded okay post-Fed meeting. This candle on the Fed day is incomplete because gold closed at 130 and the Fed announced at 2. So if you look at GLD, it's more realistic. There you go. Gold's bouncing, which is good with me because I had a big position in GDX, but you've got a pretty significant low here and gap to close here. So my sense is gold trades a little bit higher, closes the gap, and then we'll see. I think ultimately gold is going to trade below the November lows this year. Let's take a look at silver really quickly, which I think, yeah, silver is similar to gold. May look a touch stronger. Here's gold divided by silver. So yeah, silver in the last couple of weeks has traded much stronger than gold. Nothing really there. GDX, which last week I came in, I bought this candle right here. I was patient, and I just sold half of this position on Friday. So it doesn't look like much, but I think this is probably a 5% gain over a couple. This is a nice little trade. I'm ultimately looking to see GDX reach up and close this gap at 20, or I'll exit the rest of the position. So another 3 to 4%, and I will get out of this. But it's a good little trade in GDX. Jay asked, do I still own AMJ, which are the MLPs, as a core position? Yeah. I've done, in my dividend income portfolio, I have AMJ is one of 11 ETFs that pay dividends that I hold, what I consider buy to die. I bought them, and unless the clients fire in place, and I think this is AMJ is going higher. All right, so let's look at crude oil. Here's crude. To repeat what I've said all year and the last year, every single time crude's gone down 50%, after it bottoms, it's rallied 50% in the ensuing calendar year. So if we just saw the crude bottom or it's still in front of us, we have a bullish engulfing candle here. Crude's trying to perk up. Thank you. It doesn't look wonderful, but I'm sticking with it for the time being. I think a lot of that strong dollar play in the short term has been played, and if the dollar weakens, crude should get a little bit of a bid. I'll do copper and natty gas next. Here's copper, which we've talked about. Nobody should ever be short. We talked about buying it here, and every week I've said I would not be short. If anything, I'd be long with a stop in. So copper's traded fairly well. Smart money's been right here. They haven't been right in the currencies, but they've been dead on here. It's now back to where I said I'd look to get out. So you're right into resistance on copper. if you're long, it's time to really tighten up those stops to 265, 268 area. Or if we get a nice reversal candle, I'd get out of copper because there's a good little trade here. Natty Gas has done nothing. I mean, is it? We talked about last week. Is it bottoming yet? I don't know, but I have no opinion. I don't really want to step in front of this yet. I'd rather let it shake out. And I will finish. So gear up any questions you have, and I will finish with some of the old-fashioned commodities. Here's wheat. So the commodities all obviously have a tailwind if the dollar weakens. Here's wheat. We have a divergence. Lower lows in price, higher lows in the indicator, and it's playing out. I mean, wheat does look like it wants to go higher. Corn, like they're all the same theme, weak dollar. Corn, I love the little hammer on Fed Day. We were kind of breaking up on Friday. Got a little double bottom here. Corn should trade above this peak. Beans, I haven't looked at. Yeah, beans are probably the one that's the laggard. It's frustrating here. If you take a shot to the long side with beans, you must get out if it closes below this lows here. So your risk is very small with beans. Sugar looks a little compelling here. I like Friday's action. It is beaten down to death. We have a little bit of a divergence. I mean, sugar looks compelling to the long side as well, with a stop below Friday's low on a closing basis. Cotton looks like like beans a little bit. It's frustrating. It's going sideways, but I think it's got higher to go. Can you hear the theme here? All the commodities. Here's cocoa. Beautiful week for cocoa. A couple of nice candles in the bottom. Real nice candle on Friday. Cocoa's a buy as well. And watch next week. Commodities will get crushed. Coffee, I don't love because I hate this tall red candle. I like all the other commodities long except for coffee. And coffee may go up more. I just don't love the candle formation. So sense the theme. Maybe the dollar is stable or weakens a little bit and gives the commodities a little more of a bump to the upside. The overall commodity ETF, GSG, which is loaded up with mostly energy, is bludgeoned, beaten down. It looks like oil a little bit. Maybe we'll get a little more pop in commodities. Let's see. Any thoughts on Russia? I'll pull up Russia, but as you guys know, I've said it every week. Russia's a lot more volatile. They've got major economic problems. The time to buy it was here. We talked about it as it was happening. This was the time to buy it. I don't have any conviction up here. It could go up or down, and I would say, yeah, okay, it went up or down. I don't have a strong opinion here on Russia. Last call. Any other questions, comments, concerns, disagreements? Anything? Dave wants EWP. I think it's Spain. Let's see. EWP is Spain. Yep. So here you go, Dave. I mean, Europe looks a lot better than Spain does. Spain is definitely a laggard. I mean, here's Germany. I mean, most of the European countries look better than Spain. I guess if you say I want to play a laggard, okay. GK, or playing the stronger countries like Germany. Somebody asked for platinum or palladium. I think I said that earlier. Here's platinum. I don't want any part of it. It's going to have heavy resistance in here. So not really interested. I'd rather see how it reacted up here than take a stab now. Anything else? Greece. Yeah, you guys are really pulling all the volatile ones. I mean, here's Greece, another one. And if you play Greece successfully, I applaud you. I have no interest because I think the macro story there is such nonsense, and it's being played out in the media rather than in the kind of behind the government scenes. So I don't want to go anywhere near Greece. I have no opinion. I don't want to play it. If you're playing it well, far be it for me to stop you. But I don't know. It's a mess. It's going to end worse. They're a mess. It's never going to end. This is an ongoing stupid saga. Nobody cares if they default or withdraw anyway. They're just worried about other countries doing it. What do I think about South America, Brazil, and Chile? Well, Brazil has traded poorly for a while. Is there a commodity country? I don't know. I mean, if you look at just the chart, time to buy it was this past week. Is it going to bounce more? Maybe. I just think if this is the bottom, we're in for some complex bottoming work, which means we rally, we come back, we rally, come back. I think it's time to play Brazil. Chile, let's see. Here's Peru. Peru looks like Brazil, same thing. I think Chile is it ECH? Yeah, ECH. Kind of the same thing. I don't really love any of them, frankly. What the hell does South Africa look like? Nothing. Somebody asked about Israel. EIS is the Israeli ETF. I played it a lot last year. No. 2 years ago I played it a lot. No, last year I played Israel a lot. I guess I didn't make any money. There's Israel ETF on an EIS. Somebody asked what the symbol was. Turkey. Played that a number of years ago, and now I don't do anything with it. Yeah, it looks like the rest looks kind of like a commodity country. I think there are other geopolitical issues here. If you want to play Turkey, obviously it's very, very volatile. Just be careful. I don't have a strong opinion where it goes from here. Some solar sectors. I got to think about what's the Guggenheim solar ETF. I know that this is not it, but KWT is one of them, the wind one. I think the problem is the sector is so illiquid. Oh my God, I traded 900 shares, and then I bet the underlying stocks. I think if you want to play, whoever asked that question, Tan and Fan, thank you, Johanna. I think if you want to play the sector, which is really volatile in and of itself, I think you're better off trying to play the stocks than the ETF. That's my opinion. I don't have conviction in the sector whatsoever. How does the internet stocks look? Look at the NASDAQ. Okay, anything else? Going once, going twice. Okay, good. I'm starting to yawn and fade. You guys don't need me yet. I don't have all brain power ever, but definitely not as I'm starting to yawn. All right, so that's Tiny Year up in a second. Any other questions? Thank you, Johanna. Tiny, you can ask Tiny, or you can email me. Keep on guard. Stocks look pretty good. Now futures are up, nothing, a little bit overnight. S&P looks okay. I'd like to see the S&P reach up to a new high now versus pulling back right away. That will make it a little more difficult. But I think the bull market is alive reasonably well and will live on. I think we'll be able to make some more money before it hits the fan. It doesn't feel like this is where the rocket takes off into orbit. So I've been talking about Dow 20,000 for a while. I think it's coming. I just don't have a feel. I think we're very orderly right now. It doesn't have the feel that this is where we go hyperbolic. And maybe in a perverse way, maybe this scenario where we really turn it into overdrive is when somehow the bond market goes down, rates go up. As counterintuitive as that sounds, maybe that's the scenario. I got to give that some thought. So that's it for me. Tiny, you're up. Everybody have a good week. Go UConn women tomorrow night. I hope your brackets are all still in good shape. I always pick underdogs. So I, believe it or not, I had Wichita State over Kansas tonight. That was a goodie for me. And I had NC State beating Villanova. That was a real good one for me. Unfortunately, I didn't have UCLA I had losing early. I had SMU winning. That hurt me a little bit. I think I'm in decent shape. Of course, we'll figure it out after next weekend. It's when everything separates out. So that's it. I think Arizona was one of my chalk teams, and I figured nobody would have picked them. I did not pick Kentucky because everybody and their mother picked Kentucky. And even though I think they're going to win, it's not worth doing a pool by picking the favorites. So I think I have Wisconsin. Winning it all. All right. Everybody have a great week. Thanks for your hour shared with me. Tiny, all yours.
Okay. Thank you.
Oh, wait, Tiny, what did you ask me to comment on? Yellen or something else?
Yellen speaking Friday at 3:45.
Yeah. I don't think there'll be any surprises. She laid it out, everybody, last week, that even though they removed the word patient, they said they're not going to raise rates at the next meeting. So removing patience is at least 2 meetings away, and the markets love that. That's very dovish. And you have the most dovish Fed in the last, I don't know how many years. So that's it for me on Yellen. Now it's all yours.
Okay. All right, guys. Give me your guys and gals. Apologies. Give me your stocks, and I will go over them. Da 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 da. Na 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 na. Na 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 na. Da na 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 na. All right. We'll start about 9:05. What is that? About a minute and a half we'll go. And then we'll go. Good to go. I didn't even look at the NCAAs today. It was a busy day for me today. Doing a lot of writing lately. I did watch Villanova. I had a meeting last night, and we went to Buffalo Wild Wings, and I saw Villanova. I still can't believe Duke's a number 1 seed, but I guess it makes sense. The stuffed cabbage was good, and it was good a couple of days later too, but then I had it again. Let's see, I had it the day of, I had it the next day, I skipped a day, and then 2 days later I had it, and it was done. It was done. So the day of, the day after was great, but then that was it. Nah, I don't drink, so they don't card me, but I do have the wings. Yeah, I think Kentucky's going to murder them. I think there's nobody going to stand in their way. I just don't understand how anybody could beat them. They're so good. They're going to have four players going in the draft, right? They saying? Nah, I don't drink beer. I don't drink any of that, actually. Okay. All right, we're going to start. So please, no more stocks. I'd appreciate it. I just lost all the freaking questions. I don't know where the heck they just went. Here they are. Whoops, there they are. Okay. All right. So no more, please. Dow looks good. Delta looks like it wants to go higher out of this pattern. Got to break this trend line here, which basically, I don't even know. I was going to say that's a trend line, but it's really not. Let's see. It already broke this trend line, so yeah, it looks like it's okay. I think oil's going lower, by the way, before anybody asks. By the way, Dennis Gartman says oil's going to $15. You must be watching my stuff because I've been calling oil lower when it was up here. I was calling it lower, but you know, whatever. I don't make the big Gartman bucks, but I do like him. I think he's a smart guy. MA looks like it wants to go higher. If you can get out of this little consolidation. ISR is a weird one. ISO Ray. I mean, anything that's between the 50 and the 200, I just look to go back and forth between those two moving averages. So unless we break through the 50 or get up through the 200-day, I expect it to be contained. But it's an interesting looking stock. GWPH, yeah, it's one of my favorites for longer term because I just think that marijuana is just big. It's a big untapped market. I think that a lot of the stocks, I was writing a book on it and I got to do all the research over because a lot of the stocks got smacked. But like a GWPH, I think is a best of breed in this, but it looks okay. After this pullback's over, I'd be watching it to see if it could continue. INFN is a monster. I mean, this thing is just awesome. 20 and then 21.32 on next levels to watch on the upside. Craft, 200-day, watch that for potential support. 20 EMA potential resistance. Above that, you got the 50-day. It is above the 200-day, but I can't get super bullish on this because, I mean, look at it. Short term, it's trending down. Yelp looks lower. Yeah, I think Yelp's in trouble. What's this? MEIP? Yeah, this is an interesting stock. MEI Pharmaceutical. Yeah, I mean, it's consolidating here. You do have these push-offs from here, from these wicks. But if they can get above them, see if it could get to $8. CY, looks like it wants to go high. It's a pretty strong stock. IEP, yeah, it looks lower. It looks crappy. It's below the moving averages. Trending down on the short term. Just doesn't look great. CAPN. It looks like it's in here's a weird one. Capnia. Looks like a small head and shoulders. Looks like it's a new issue, so got to give it a little time, but it doesn't look great here. It doesn't look terrible, right, because it had this big push up, but it could be a small head and shoulders. It's an interesting stock to see this one. ERI, yeah, it's the same kind of thing. Eldorado Resorts. I mean, it had a nice push, but it gave back most of it here. So you got to watch that. Alibaba. Yeah, I want to watch to see if it could break out here. Maybe it's putting a bottom in here. Got to watch to see if it takes out that high. PEI. at the 50-day. If it can get above that, look to see if it challenges 25. But looks nice. Looks like it's got some short-term momentum behind it to the upside. Finish line, just not interested. Consolidating here. If gun to my head, I'd say down. Gun to my head, I'd say down. Starbucks, monster. Look for a pause, pullback for buying opportunity. GOLD as in gold, 20 EMA potential resistance. This is a coil here. I'm sorry, it's more like a wedge. It's not a coil. It's more like a wedge or pattern. So if it rejects here, see if it can trade lower. Home Depot, as my father would say. Rest in peace. Monster, 125 target if it can keep going here. Looks really, really nice. VIP, consolidating. I think it'll get to the 200-day moving average. Looks good. Okay, for now. SLW, yeah, this is you got a nice little W pattern here. And if it could take this high out, look for the 50-day moving average to get tested. Honeywell, monster. 110 would be the next level. What else? FEYE. Good little pattern here, FireEye. Wait for confirmation. It looks like it's in a bull flag. Wait for confirmation, though. Okay, BLL. Looks like it's coming off the 50-day. Not a bad-looking stock. See if it could get going. Appalicious. Consolidating. Looks higher if it can go take this out to the upside. Okay. UA. Overbought. Under Armour overbought, but looks very, very nice. Pullback / pause. Be watching this for a potential buying opportunity. Let me get rid of the bracket because it is annoying the living crap out of me. BAL. Yeah, I mean, the 200-day looks like resistance here. ALV looks higher, and it looks really nice. ALV looks nice and strong. NLY, it's just too sloppy for me. Could be a potential double bottom / small, not small, but potential W here, but I'm not excited about it yet. Halliburton, I could be gaining a spark. Got to get over 45, though. Got to get over 45 with a bullet. AGNC, a little sloppy, and it's over the 50-day. I mean, you're looking at the 200-day as a target if it can get going. How about my ANAC? Just a total freaking monster. This stock is an absolute total monster. Pointed this out when it was back here, and yes, I am bragging. Can't help it. Everybody saw it. I put it on my market video. Just a freaking monster, man. Amazing. All right, GILD. Still in this consolidation that it's been in for a while. So, yeah, this is a monster, consolidation, which means eventually when it breaks, it should get some legs one way or the other. EXXI could be bottoming out, but again, picking bottoms very tough. Very, very tough. Very, very tough. EQIX. Looks okay. I mean, it looks strong. Just want to wait for a pause or a pullback. Coca-Cola. I got to sneeze. Hang on. Coke. Just had 3 sneezes there. All right, so Coca-Cola, sloppy is the best way to talk about this. It's sloppy. I don't see anything here. At the best, it's a sloppy range. AAV, again, sloppy, not like Coca-Cola sloppy, but sloppy. You gotta wait for it to tip its hand. It looks like it wants to go higher because it's above the moving averages. You gotta wait for confirmation. I mean, you can't, you can't guess at this. You can't guess at anything, but I mean, this is, And then Wendy's looks good. I mean, I like Wendy's. I think it looks all right. We just went to Wendy's for the first time in like 6 months Saturday. My youngest was like, "Can we go to Wendy's for lunch?" So we went. I didn't eat, but we went to Wendy's. No, I didn't eat. I don't eat that stuff, but my kids love it. Okay, last couple Rex. Looks lower to me, but it's more consolidating than anything. LL, I think, is going much lower. I think LL is going to get destroyed. I think it's going to go lower here. Yeah, I think it probably going to $13. I mean, it's in bad shape. CBS on the weekly chart looks good. What about the daily? Yeah, I mean, it looks like it wants to go higher. Googleicious. Yeah, it looks okay. I mean, the problem is it's hanging around right here. It has to kind of leave this consolidation here. You know, Delta Airlines. Did we do Delta already? Yeah, we already did Delta. CEMP. I mean, it's a monster. You know, you got to wait for a pullback or a pause on this one, but it looks like it's going higher. All right, everyone. Thanks for coming. Talk to everybody next week or in the email. I'm going to do my market video. You guys want to hang around? I'm going to do my market video. I'm going to stop recording